my Uber driver yesterday. I was telling him the same story. He's like, yeah, in LA it's a little bit different, but I actually got this one cart. They sell this barbecue, and I'm in and out of there for really cheap, and it's really good. I was like, what's it costing? He's like, well, I got a rib, a beef rib, and some pulled pork, and I'm in and out of there for like I think it's like $32. I'm like, that's inexpensive? He's like, yeah, for barbecue, that's pretty cheap. I'm like, I'll take your word for it, man.
Do you do anything in Airbnb?
No, I've never actually owned short-term rental ever.
Yeah, it's interesting because I'm, as you said, Uber, right?
Yeah.
Uber and Airbnb to me were the two disruptors that came in and actually created an alternative that was a better experience for a cheaper price, significantly cheaper. Uber is like premium car service now. It's so expensive, and I feel like Airbnb is the same way. I'm back to staying at hotels over Airbnb.
I think a lot of people are doing that. And just yesterday on that same Uber ride, the guy told me that he was making $12 on the ride, but he was charging me $45. The ratio is normally like 50-ish or something like that. He was telling me, but for some reason this ride in particular just completely hosed him and completely gouged me.
Same thing happened to me. I was in Vegas last week. The same exact thing happened. I popped up. It was like $45 to get 2 miles to the airport, and it was early. So I was like, hey, how are you? You driving in the morning? He's like, yep, quick way to make $15. And I was like, dang, okay. Yeah, it is what it is, I guess, huh?
It is what it is. I mean, it is the free market, which I love and everything. But then what do? You got rent control? That can be a problem economically. Uber control, food control. How do you what do you do about it? I mean, it's a tough one. I pushed the button to accept it, so.
Okay, so I love the free market. Like I'm a big believer.
Oh no,
in let the market be the market, right? Yeah,
I came prepared.
You're gonna know. So what do you think is the best scenario in that outcome? Like when it's no longer competitive, do you let a new company come in and disrupt, or do you think there needs to be controls? Like, what's your view?
It's a supply and demand deal. It's the same thing with real estate. I mean, I think you famously said in one of your videos, if rent's too high, developers build, and then developers overbuild, and then they make concessions and rent goes down. Drive through any city right now, there's a lot of developers that are giving concessions, Portland, LA, and everywhere, because they've cranes in the air, beware, right? Mm-hmm. So nowadays, rents are gonna they've more or less stabilized in my area, but that's the free market. If there's an opportunity to make some money, someone's going to fill that gap. It's a vacuum, and I think that in the shared ride space, it was a disruptor. Now I think it might even be due for another disruption, perhaps.
Yeah. I agree.
And that's the free market at work.
I agree. So, okay, so you guys, what are you guys building? Is all your real estate in Oregon?
Yeah. So,
is it Portland specifically?
The developments that I do are all in Oregon. So I've got an industrial development in Stanfield, Oregon that I'm working on, and then a multifamily development in Portland, and that's up in North Portland. But then I own like seller finance, like single family in like Idaho and in Texas and a couple other states. Yeah.
Okay, so you're multi-asset class and
everywhere.
Multi-state.
Yeah.
Do you have a preference on one over the other, or is it just about the deal? If the economics make sense, I'm doing it.
If the economics make sense, I'm doing it. The out-of-state deals, I can't be very involved in it because I'm not there. I don't want to do a multifamily development in another state because it's a lot of work. But I could do an industrial development out of state because it's a whole lot easier to build a box than it is to build a multifamily building. There might come a day when I could do a multifamily building out of state, but for right now, 10,000 square foot box, copy paste. This much money, this much income. It's the same calcs as a multifamily with your cap rates and whatnot. And all these asset classes, they used to trade at very disparate cap rates, and now it's pretty similar now. And so out of state, in state, just depends on the deal.
Okay, so if you're going to do something out of state, what does that look like? Do you have somebody do you bring on another crew to develop it? Is there do you have like a superintendent on it? Like, how does your structure look?
So most of what I've done out of state has really just been like these onesie-twosies, single-family seller finance deals. I basically will seek out like barn burner seller financing, like a subject to at like 2% or something like that. And I'll buy it and then put like a seller note on top of it at 0%. And so I'm getting a house like at market value, but my weighted average cost of capital is like 1.5% or something. And so in that case, all it really has to do is just like break even, make a couple $100. And so I need a property manager and like maybe you got to, paint the railing white instead of blue. And so I just, hammer the phones, interview property managers. I've gotten good at that. And basically just, say, all right, go for it. And most of these I've bought without even looking at them. I don't even fly out or anything. I just, I have them FaceTime me as I walk through and be like, walk over here, walk over there. It's like a real-time Matterport tour with a property manager.
Okay, so I have no experience with the subject to or any seller financing stuff. And when I heard about it, I think Pace might have been the first person I heard talk about it.
Yeah.
And it like seller financing sounds in some regards too good to be true. It's like sounds like the best thing ever. Is it that good? And what are some of the challenges? Like being somebody who doesn't have experience, like what would I do to go out and get a home and have somebody's, debt stay with them? Tell me about that.
It's hard to convince a lot of people to do it because the only way it makes sense more often than not is to get a rock bottom interest rate. And if I said, hey, Mikey, I want to buy one of your properties, but here's the thing, you're going to have to give it to me at a 2% interest rate. You're going to be earning 2% on the money that you're getting from this property. You're going to be like, hey, thanks, but no thanks, right? Not everybody, thinks that way. Some people just really want to unload a property, but they just don't want to unload it for a rock bottom price. They got it at $300,000. They're going to sell it for $300,000. Their debt is at like, 270. So they're kind of walking a line, but that debt is at like 2.25% and just never occurred to them or their agent more often than not that this is a possibility. And so you swoop in and you do a lot of educating over the phone. And, I've had a lot of these conversations where I've had to just start with square one with these agents and these owners, and you just educate them. And as long as they got an open mind, you can usually make a deal.
Okay, so if I own the home and I'm in at $300,000, I've got a 30-year fixed at 225.
Yeah.
How is that process going for you and I? Is it I want to get more than 300, but I can't? All the offers have been sub 300, and that's where seller financing comes into play?
You can afford to pay more, essentially. And that's one of the big arguments that you give them. You say, like, man, you're not going to get $300,000 from anybody unless you do a deal like this. And moreover, it looks like, you've owned this property for a while. So, your tax hit on this is going to be pretty significant. I don't know what your tax bracket is, but here's capital gains taxes, different tax brackets. You're going to be paying a lot of tax if you cash out on this thing. So here's a way that we can do what's called an installment sale versus that's what the IRS calls it, the installment sale. So you're going to save taxes, you're going to get your price, but it's going to be you're going to be the bank. Being the bank is great. What do you say? And sometimes they take it.
Okay, so in that deal, am I getting any capital?
Yeah. Not as much though, because I don't want to put a whole lot down.
Okay, so your down is basically going to be my kind of quick hit.
That's your walking around money.
Okay. And then on the development side, majority of development you're doing in state. Mm-hmm. And how are you going about building?
Same way as everybody else. Nothing super unique about it. I get an architect, an engineer, and a contractor, and I end up being the one who looks like a hero at the end. So
okay,
yeah. But I'm getting my GC license now because when it comes to just building the box, the industrial warehouse, the flex space where you just build a box and you demise it into spaces. That's just really easy, and so I can do that. Whereas like building a multifamily building, I could GC it myself, but that's a lot of work. Those guys do earn their fee.
100%. Yeah, they do. So what's it like working with the city? Because I live in a state like yours that's a little bit more challenging. Okay, so talk about that. Like when you want to go get a deal done or you need to get something entitled, how long does it take you to get through entitlements? Multifamily. How's multifamily?
That's 6 months.
Oh, dang, that's fast.
Yeah, in a perfect world. But I've had things take I had one project take like 2 years.
Okay.
And that was a little bit more challenging. We had to build a sewer pipe. We were on a slope. There's all sorts of considerations. And plus, I was a little green at the time. This is several years ago. So, I had good help. But But yeah, no, that's it's a little bit tough when you're in a jurisdiction that has just a whole lot of red tape, and that's how actually I ended up kind of getting into the squatter and deed fraud space because of making that video about like the red tape about getting rid of the squatters, and so it was actually it's funny. It's that very thing, I think, that it's difficult to develop and do business in real estate in places like Portland or Los Angeles that actually, in some ways, makes it a lot better because it constricts the supply and it lends itself to forming niches, and because that's what you got to do to survive.
So, on the squatter stuff, did you have somebody squatting at one of your properties?
So I've had a handful of like, just we'll call them like non-professional squatters, like drug addicts that fell asleep in one of my construction projects, or a flip house that came and there was like a guy inside who was just on drugs and confused. And I say, all right, man, you got to go. And so, but a handful of people that I know have had serious squatter situations where like professionals have moved in that knew the laws, knew what they were doing, and really just exploited it. And I heard these stories and I was like, this is insane. And so that's when I made the I Stole a House video, and it completely exploded. And then I became like the lightning rod for every squatter story and scam story in the entire country. And it made me realize, this is a very, it's a heinous crime that's not being addressed. It's an underserved market. And I think there's an opportunity here. And so now I'm on a mission to educate people about it.
So what's the challenge with the city or county or state policy? Like, if you're the politician, what are they missing? Why are they allowing people to squat?
It comes down to landlord-tenant law. Essentially, is what the squatters are doing is they're impersonating and getting the rights of a tenant. The tenant has a bundle of rights afforded to them just by having a contract to rent a place. So what the squatter does is basically makes it seem as if they are a tenant, a legitimate tenant. They're not. But when the police officer arrives and the squatter says like, well, I've got this, lease here, it's fake, and the homeowner says like, that's not real, then we got a he said, she said situation. The cop says, you guys have got to go sort this out. And so then you're effed. You got a squatter.
Right. So then what do you do in that scenario?
Well, that's why I made.
So if you're an owner and that happens, what do you have to do currently? And then what's the actual fix long term?
So that's why I made Squatter Defender, because when I heard about all these different squatting scenarios after I went viral, everybody was doing something like across the board. There was people that were like releasing snakes into houses, taking squatters out at gunpoint, calling their lawyers and sitting in court for 2 years. There's like everything across the board. So I heard all the stories and I just kind of consolidated all the info from that into my Squatter Defender course so that people could just sort of apply it to their scenario and make a wise decision on what to do. But to answer your question, most people just call their lawyer and their lawyer says, okay, well, if the police aren't removing them, we have to evict them. And if we don't evict them, we can try ejectment also. So eviction is just getting rid of a tenant. You broke your contract, you're not paying, you gotta leave. Ejectment is you never had the right to be there in the first place, so we're just gonna get rid of you. And you'd think that would be quicker, but it's not. It's actually a long docket process. It often takes a whole lot longer. And eviction, kind of tacitly admitting like, oh yeah, this guy is a legitimate tenant, even though he's not, it takes a shorter amount of time. And remember, the objective is to get the guy out of your house. So you go the eviction route and you sit there with a straight face, telling a judge like, yes, this tenant needs to leave. And the guy doesn't show up, gets a continuance, hires a blood-sucking lawyer to defend him for free, usually from a state agency, and the process goes forever.
The thought that you have to go through the eviction process from somebody who never actually was a tenant is insane. And it's interesting, how many things like that do you think exist? Like, you saw Elon just recently in North Carolina talk about, he's trying to come on and deliver Starlink for people so that they could communicate, but part of the policy was that you can't land and give somebody something without their like verbal confirmation. And he's going, gang, if no one can communicate, this whole policy is void. This doesn't work. Kind of sounds like what you're just describing now. Is there a lot of that happening, do you think, nationwide? So let's start with that.
Boy, I'd like to think of some other examples, but I feel like we encounter them in situations pretty often in our lives where there is something that makes so much sense, common sense, like, okay, this guy shouldn't be here. He has no right to occupy this property. But there's a policy in place that's just sort of a catch-all for everything, and that's, landlord-tenant law. And unless you apply a specific law to a specific scenario, people are going to exploit it. And that's essentially like what's happened here. And then also on the deed fraud front, there's ways to fix that also, but it involves like a big government. It involves crafting new laws, and it involves a big overhaul. And government moves really, really slowly. You need to have a massive problem and a massive outcry for change to happen, if change is ever going to happen at all.
Okay, so do you think this is a function of the politicians that are creating the policies aren't real estate owners and don't know the dynamics of this? Or do you think it's more of like what you're saying with maybe some of the compassion, like kind of plan? Hey, tenants need help. This is unfortunate. We need protections. And then it creates an outcome that they weren't originally anticipating.
It's a little bit of both, but a lot of the latter. And that varies state to state. We'll just call it like the compassion for tenants. And I think you and I would both agree that there are some bad acting landlords out there that will just say, hey, you need to leave this house and you need to leave. And that's not a good thing. So that's why we have landlord-tenant law. But it's gone overboard in a lot of municipalities, to the point where non-paying tenants and squatters have a bundle of rights afforded to them to stick around that is beyond rationality. And it's well-intentioned. These laws are well-intentioned. They're to keep people from getting hauled out of their houses and out onto the street unnecessarily, but it enables and emboldens criminal acts. And that was what I heard about time and again from people, and it was just mind-boggling. It was happening in red states, blue states, and people tell me all the time, especially that are more right-leaning, say like, "Oh, this is just happening in blue states." And I'm like, actually, there's a lot of people like in Oklahoma and Texas that are telling me the same things, and they say like, "Oh, I would just grab my gun and pull them out at gunpoint." I'm like, "Yeah, actually, I heard about scenarios like that too, and they've resulted in people, the squatters." Unaliving them, and then the other way around, and then going to prison for it, and it can be messed up. So you got to consider all this when you're deciding what to do.
Yeah, that's right. So for I saw a video you did on homelessness.
Yeah.
I've been to Oregon many times. We've got a big homeless problem here as well.
Yeah.
You had a different approach than what I think the city had. My first question to you is what do you think the percentage of people struggling with homelessness is based on the affordability of housing versus mental illness and addiction?
People ascribe way too much of it to the price of housing, I think. I think it's a small percentage. But the people that are of sound mind, they want to work, they've got their act together, but they just can't afford the rent. These are the people that are out there seeking help, going to state agencies and actually getting help for themselves. They're not the problem. The problem are the drug-addicted homeless that are unwilling to seek help for themselves. And they're a strain on resources because we can't force them into rehab. And I think that 90-some% of the problem is addiction. If you talk to anybody who's in that space, they'll say that the large percentage of these people are addicts in one way or another, and mental illness and addiction, they go hand in hand. It exacerbates your mental illness, and if you've got a mental illness and no drug addiction, you're still in the same boat in that you can't be responsible in your mind for your actions, and it makes for a terrible situation because you really want to help these people, but they can't help themselves. So then you have a choice, like, do you force them? To me, the answer to that is yes, you absolutely do. Because sometimes people think that people won't change unless they want to. And that's often the case, that it makes it a whole lot easier to change because you can't change a light bulb unless the light bulb wants to change. But a lot of times, people can't even make that decision for themselves because they're so clouded by drug addiction and mental illness. And it's a reality that a lot of people haven't yet accepted, but I think they need to.
Yeah, so my little brother was homeless for over a decade. Mental illness, addiction had. I think for him, he was the example that it was actually more mental illness and then saw addiction on top of it, where, it's very difficult to know which one created the other or if it is a combo.
Right.
And, in this scenario, I think it's what we were just talking about. I think it was back in the 80s, there were actual mental institutions and, there was a percentage of people that were probably put into mental institutions that shouldn't have been there, right? So then it was like, okay, how do we stop this from happening? Let's not allow anyone to force help on anyone else. And then, that mixed with a decision that I really wish Reagan wouldn't have made here, which was basically we're getting rid of the mental institutions.
Yeah.
And now, the scenario that my family and I were in when this happened 10 years ago was my brother went through mental illness. When you have a mental illness, you don't know anything's wrong, right? You're not in a place where you're going, oh yeah, I can't think straight. I'm living on the street. This is totally normal. They have an inability to see the illness. And mental illness typically doesn't come on once, it typically comes on once the brain stops developing. So this is usually after 18. So you have an adult that goes through a mental illness that can't recognize that anything's wrong, and then the family members can't force help. And now we have a scenario where, you're looking out at a large population going, this isn't right. Like you've people struggling and there's no ability to actually help. It feels like everybody's hands are cuffed in a lot of ways.
It feels like a lack of compassion because compassion takes different forms. Is it compassionate to let somebody sleep in a tent, continue to have their life spiral downwards and let the bodies pile up to the rafters? No, it's absolutely not. You need eventually to intervene, and intervention is not pretty a lot of times. You need to get out there and take the folks who can't help themselves and make yourself help them. You need to help them. And help takes on different forms. Sometimes it is just taking somebody out of a situation in entirety. And what we did in Portland is we've made it so that if you give a homeless person shelter and they refuse it, and they just keep refusing it, it's like 3 strikes rule or something, then they can actually be prosecuted for that. I think that's great because there needs to be a line. And just like you were saying with your brother, which I've a ton of compassion for, but if there's a line in the sand, then both the addict and the general population know that there's a limit.
Right.
And that is where the compassion turns from, hey, do you need anything? Can I get you a blanket? To like, it's time to kick this thing.
Yeah, that's right. Yeah, and if you would have asked me 15 years ago, should we be forcing people on the streets to like get help? I don't know what I would have said 15 years ago. If you asked me that today, what I went through with my brother, I wish I had the ability to force help. Or to actually put him in a place where he could actually get, whether it was medication or get to a point where like his life could potentially come back. I would have done anything for that. So I'm actually on your side with that one. And then, I've always believed that incentive works, right? Like when you create incentive structures, people naturally move in that direction. I mean, this is more of a tangent, but that's our tax code, right? It's like the whole tax code was built around incentive to put dollars in certain areas. That goes beyond money, right? That's just kind of, I think, how good law is created for like a community that's thriving.
Yeah, it takes into account like human psychology.
Yeah.
What incentivizes people to act and do certain things. And when you're incentivizing people or like enabling people to, get high for really cheap, I might add. Fentanyl is cheaper than any drug that we ever tried when we were growing up. And it's ubiquitous and readily available, and it's killing people like crazy. So you don't, if fentanyl costs, 100 times as much, there'd be less of an incentive to do it because, you can't afford it. But everybody can afford to get high on fentanyl, right? Even the completely broke. And just like you're saying, Mikey, it's being incentivized by way of enablement.
So are you guys doing any of the housing first, which is basically creating apartments for homeless? Are you doing any of that? Not you personally, but is Portland or anywhere in Oregon doing it?
Yeah, no, I thought you were asking me, and I was like, oh boy, no. But
You're like, what am I?
yeah, we actually, so we're building homeless shelters that are basically that are going to hopefully consolidate the homeless into places where they can get help. And
Is it a housing first model or a shelter first model? Most people don't know the
shelter.
difference.
So yeah,
Okay.
so they're not giving them like like a nice apartment downtown or anything. They're basically putting them in these like not like temporary shelters like tents, but like there's you probably seen them. They're like tiny houses essentially, which I think that is a great model. If you've got people consolidated in an area and you're making them get help and making sure that they're on the straight and narrow, and there's a carrot and there's a stick. You go through the program and you go through this, and if you do, you're going to get a job in an apartment, you're going to get your life back, and you're going to reclaim your existence. But if you don't, you can end up in jail, and that's a bad thing. But some people that have ended up in jail, that's where they kick their addiction, because it's like, oh, wow, okay, this is kind of a wake-up call. This is a real gut punch. So, but being in that system, I think is a great way to go, and that's what Portland is slowly but surely doing.
Yeah, I like the shelter first model personally. Like we're working on one here.
Like you're involved with it, or
I'm on city council in Thousand Oaks.
oh yeah,
Yeah, so like everything you're talking about, we have to somewhat navigate through. Like we are, we have our state policies, and then we have to kind of figure out how we navigate through what the state is saying.
Yeah.
But with homelessness, it's the same scenario. Like we have, a very small percentage when you compare it to somewhere like the Valley or LA, but we have it here. And so the question becomes, what do you do? And for me, I've always, and this is probably coming from my experience with my brother.
Right.
I want the shelter first approach. I want an opportunity to bring somebody in and actually build their life back. And when they're on process or they're making progress, then maybe line up something like, subsidized housing or something as you're kind of going through the rebuild. What I've never liked is just create, like they did it in LA, like a brand new Class A amenity rich apartment where you're spending, 700 plus K per unit to build it.
God.
And you get access to it if you're homeless. Like, I just don't understand that one.
New construction for affordable housing, homeless housing, for any of those makes zero sense. If you have a bunch of money that you can apply to this problem, we have a ton of it in Portland. It's like $350 million. It's about as much as our police force gets. And we're not even spending it. But if you spend that on new construction, it's such a squandering of resources. If you've got instead vouchers, coupons, anything that can go towards getting these people into some housing and compensating landlords for the risk of having somebody in the system and in one of their units like this. Like if the city said to me, hey man, we're going to pay this guy's rent, and if he trashes your unit, we'll fix it for you, I'd be like, bring him on, let's do this. But if they say, hey, just take this guy, here's $100, I'd be like, yeah, I won't do it unless you make me.
I don't think any of it's really privately owned, right? It's a bunch of
it's publicly owned.
Yeah. So what I do, let me get your perspective on this one. Los Angeles they created a couple incentive programs for 100% affordable housing. So this is now more on the Section 8 and voucher conversation.
Yeah.
And if you build a new apartment in LA that's 100% affordable housing, you can get through your entitlements and permits within 10 months, which for us, that's normally 3 to 3.5 years. Oof. So it's massively sped up, and then a lot of the fees are reduced. So you can get through it quicker at a lower cost. Thoughts on that?
I mean, it sounds great, but it depends on how you're defining affordable. Like, because a lot of times, like, affordable housing is like, if you've got 70% of the local median income, and studio apartment, instead of being $1,500, is $1,200. So you're essentially like saving a little bit of money. So that's factored into like a pro forma. So it's how much money you're saving the developer versus how much less cash flow he's going to get.
Right.
And it just ends up being a calculus just like any other building. And if someone said, hey, we're going to give you a pile of money, but you're going to make 30% less on your rents, I'd be like, all right, guess I'll plug that into the spreadsheet and see if it works. So really just, it's all comes out in the wash on the spreadsheet.
Well, I guess the question I would ask is what we're seeing right now is if you go through the affordable housing program, let me give you kind of the comparison. If we do a market rent project here, let's say even LA, we're looking at probably an untrended, unlevered yield on cost of, let's call it 7%, 6.5%, 7%, right? We're seeing people go through the 100% affordable housing and they're going unlevered, untrended, like 9 to 10% yield on cost.
Oh, okay.
Significantly higher. So if you're, and this is now getting back into incentive based, right? When you create the incentive for an investor to make more in the area that you want them to go in, they're going to go there, right? My question to you is not actually on the investor lens. It's for the housing issue. Is that good for housing costs? And does that help with the housing crisis? Or does subsidized housing or government kind of programs make the problem worse?
I don't think that. So I still think it's not as effective as giving vouchers and rent credits to existing housing stock, because you're essentially putting more money into that, and that's going to get more new market rate housing. But at the same time, if you're getting a yield on cost that's beyond that of market rate housing, and you can make money on that, then yeah, that's going to create more affordable housing. But you were asking me before, like how much of homelessness has to do with, the rent being too expensive. These people are not like, okay, well, I would totally get a studio if it was like $1,000, but since it's $1,500, like, I'm out. Yeah. I'm just going to go live in a tent. That delta is not the reason that they're living in a tent. It's because their lives are completely, horizontal because of, drugs and addiction and mental illness. So I don't think that it's a solution to homelessness. I think it's a solution to people paying out the nose for rent and having their lives and having more money to spend on groceries and services.
I'm glad you brought that up. So you and I shared the same opinion on what the breakdown is for those struggling with homeless as it pertains to, housing costs and then mental illness and addiction. I think the overwhelming majority is addiction and mental illness. And so, for the percentage that are homeless because of cost, I'm in agreement with you. That's the easiest one to solve. And when you see those people, they're typically like trying to find solutions. They haven't, I hate to say given up, but they haven't. What I'm actually, for the affordable housing one that they're building, I think they're trying to address the housing cost for just everyone. Californians, right? Like you're spending 50+% on living costs now. And so if you were the governor of the state, right? You're Gavin Newsom, California, and you have a housing crisis and you're looking at the majority of county supervisors, mayors, and councils, calling you going, housing costs are too expensive. You need to do something here. What are you doing?
Well, first off, the permitting process in Portland, it's going to cost you in the multiple tens of thousands of dollars to just build one single unit. And I've heard, never built anything down in LA or San Francisco, but I've heard that down here it's even worse. And that system development charges for your water, your sewer, your parks and everything are just astronomical. But if you, in Portland, if you build a accessory dwelling unit and you sign an affidavit to not do a short-term rental on it, you do a long-term rental instead, they waive your SDCs, your system development charges. So it saves you about $25,000. So I'd say one of the biggest things that the state could do is to offer abatements and reduction in fees, because, who's that going to? It's just going to the government. And yes, we got to maintain our roads and everything, but like they're outsized relative to the actual impact of one guy buying a house. Whereas the construction costs are high because we got to pay the plumbers, we got to pay the workmen. These are the guys that are actually building the houses, and they need to be paid. There's no way around that. So I think that on a government level, you need to cut and abate those permit fees, those system development charges, because it's such a massive portion of any developer's spreadsheet.
I totally agree. Yeah. So our state is there were some programs and laws changed, around ADUs as well. And your ability to add an ADU to a property or a junior ADU it's become much easier and streamlined.
Yeah.
But I want to get your opinion on this.
Yeah.
In one regard, it's opened up the ability to add housing stock potentially quickly. Yeah. But for those adding ADUs, they don't have to go through the same, impact analysis or the environmental impact report that, multifamily has to go through to see, what happens to traffic, what happens to, every part of the infrastructure of a community by adding this apartment. Yeah. So my question to you, and this is the one that I'm actually struggling with, if everyone can add an ADU to their home and you don't have to consider something like traffic, what do we do with that?
I think it's great. ADUs are being added left, right, and center in places like LA and Portland, and it's increasing the housing stock with, we'll just call it like lower, not low cost, but lower cost, because a lot of times they're like studios and one bedrooms, but they're nice and they're new and they're market rate. They make the mortgage more affordable for the homeowner, and you're adding housing stock, and you're not having nearly the red tape that you do with a multifamily development. The trouble is there's just not enough of it. How many ADUs can you add to your house? One, maybe two?
Right.
Sometimes it's big enough that they'll let you throw, I think Portland, you can get up to like to 4 units or something if the lot is big enough.
Right.
But most people don't live on a big lot. They're going to throw like one out there, maybe, and it's just not enough. It's not enough. But if they applied that same logic to like multifamily development, yeah, you're going to get some people that are objecting to that. But look at other places where there's a whole lot less fees and red tape. Their housing stock is a whole lot less expensive. It's because they let people build more of it for less money and less hassle.
Yeah, I agree. I totally agree. As far as investing right now, right? Interest rates are high. Have cap rates softened by you guys on multifamily?
Yeah, I mean, as interest rates have changed, people are getting a little more optimistic, but generally they're still, you're gonna be negatively levered on a project unless you're not careful.
Like if you're buying something existing?
Yeah, if you're buying something existing and, but for new construction, same thing applies. You can't have your debt at 7.5% and have a 6% cap and expect it to be worth a 6% cap.
Yeah.
No one's going to buy it and no one's going to fund it.
So are you guys buying right now, or are you guys on the sidelines?
I'll buy the right thing, but I prefer actually on the building side because the metrics just, work a little bit better because, right. I've been waiting for years now for sellers to just wake up to the fact that, they need to raise their cap rates. They need to lower their prices in order for their stuff to trade. But, they just, some guy will come along and pay cash for it, and it hasn't happened yet. I don't know what it's like around here, but around my way, that's it.
Yeah, there's some stuff. There's definitely some crossover. Like on your existing product, it's very difficult to pencil. Like most people we're seeing is they're buying all cash, and they're maybe waiting to backfill it with debt once the debt market normalizes. Development, like that's what we're doing right now. Like we are buying more today than we have in the last 10 years. So we are actively buying. We're not buying anything existing. We're looking at everything that we can scrape and build. But that's not everybody. There's definitely like groups that are like, I'm on pause. I think it depends on when you're coming into the picture though. Because if you got in at, let's say 20, 21, 22, right? What you were underwriting the project for looks completely different today than what it did back then, right? Yeah. Cap rates have moved almost a full percentage point in comparison. Interest rates are significantly higher. Cost went up depending on when you underwrote it. And so a lot of people's deals, if they were started developing them, they're not now penciling for their refi, right? So like there's a lot of rescue capital coming in right now and stuff like that. A lot of places
being recapitalized.
100%. But for us, getting deals today, well, yeah, it just comes down to the numbers. And if we can get the premium on our yield on cost and maybe current cap rate for a newer Class A multifamily, okay, we're good to go on that. But getting the financing is harder. It takes way more equity. So we're 40 to 45% down on equity now, where you weren't doing that in 22. So it's harder, but my outlook is for Class A multifamily in California, we've corrected by 2 times what we did in 2009, right? So we have already seen a bigger correction by 2x than we did post-financial crisis. I want to buy during that. Now, the caveat is we saw so much rent growth that a lot of buildings, the actual value didn't come down too much because rent increased so much that the increased NOI offset the decrease in cap rate. Yeah. But, okay, if I can find a distressed asset with no income coming in with a cap rate that moved, we're going to go for it.
Yeah, yeah. You just got to get, that cash burden of having to come up with a 45%.
It's heavy.
Yeah, it's heavy. And having raised money for an apartment complex in Portland in 2021 and 22, I can tell you, there's some people that say, you want to build or buy an apartment complex right now? How much do you expect to make on this? Let's see the numbers on this. And I had so many conversations with people that were just rightly so skeptical.
Right.
And, that's, it comes to capital raising. I know there's levels to this and everything, but we were going for, guys that are going in for 20, 50, 100, 200. So in that range. On institutional levels, I know things work a little bit differently, but just down here on the street level, it was a bitch.
Right.
But at the end of the day, things have held up. And a lot of times when there's a burning building and you're running into it while everybody's running out of it, it means that, when you go vertical and when you actually deliver, there's going to be no one else around. And that's the scenario we're finding ourselves in. We got the thing funded, by the skin of our teeth and went vertical. And now we're going to deliver at a time when nobody else is going to be delivering. And so now there's headlines saying we're going to be this many units short. Nobody's been building. Oh my gosh, why wasn't anybody building? And it's because of those conversations where everybody is just really freaking nervous.
100%. I have the same outlook. For all the development deals that are on pause in the areas that we're building, that means that once everything opens up, they still have their 2 to 3 years until the project is either going vertical or even at the point where the market realizes it. We're going to have our stuff that's leasing up. So I'm in agreement that we're going to be first to market once everything turns back on. On capital raise, do you bring investors on for every deal you do?
No, I've been self-funded for a really long time just because I hadn't done a whole lot of bigger deals. But then, a few years ago, I started bringing LPs on and, funding deals that way. And, that's sort of the next level. I was in the weed business for a while. I've been kind of on a little bit of a career arc, but then once I got back into it, started doing single family flips, then multifamily. I was like, okay, let's go to the next level because you can only self-fund for so long. Things get big enough.
Okay, so you like the idea of bringing investor capital in versus doing it all yourself.
Well, you make more that way. Is it better to make 40% on 100,000, or is it better to make 50% on 500,000? Well, okay, I just spent all my cash. It's okay, I'd rather have several irons in the fire, hope all of them work out, but be getting a better return on all those things. And when you're the general partner, if things work out the way you want it to anyway, then you make more money on your money.
Yeah, I took the same approach. Right?
Yeah.
How many deals have you guys raised money for?
Just a couple.
Okay.
Yeah.
And how big were the projects?
Just apartments, 24 units.
24 units. So was this a development?
Yeah.
Total cost on a 24 unit in Oregon is?
It's like 6 point something million.
Okay, so a couple $1 million raised?
Yeah.
All right, and how was that process? First capital raise for you. Was it harder than you thought?
Yeah, man, it was an absolute bitch.
Totally.
It was hard. I called up everybody I knew that had money and said, here's what I got. And so the responses ranged from oh my God, this is amazing, I'm in, all the way down to are you crazy? And I kept a big spreadsheet, and they're all color coded with red, yellow, and green like a stoplight. And I just plowed through all of them until we had the money.
Did people saying you're crazy affect you at all as far as
yeah,
it was hard to
question it every single day. What the heck am I doing? Is this worth it? Because and what if I don't fund this thing? What if this doesn't happen? We don't go vertical. We've spent money while we've been sitting here. do I give them back less money and say like, all right, here's your money back minus a little bit, or do I make them whole and come out of my own pocket? Like, yeah. And so when I talk with other people that face these same decisions, and people do a little bit of everything. Some people will come out of their own pockets to make people whole. Some people will come out of pocket to give them some kind of return. And so I think we all, as developers, eventually kind of come to that kind of decision tree at some point. What are we going to do if things don't go the way that we think they're going to do? And we're seeing that with a lot of multifamily syndicators right now. A lot of them are kind of struggling, and some of them are showing their true colors.
Yeah, I was actually with somebody a few weeks ago who has a project that's not performing, and they're now kind of wrestling with the idea of letting it go at a loss and having to make the phone call to investors that they lost some money. And he was kind of asking my opinion, like, what should I do? And in this case, like, do you pay the investors back? And, what's the best way to get through this? For you, I hope you never go through it. For us, we haven't had to go through it yet either. If you took a loss, are you calling investors saying, hey guys, we went for it, this went wrong, you're going to take a loss on this, sorry? Or would you try to make them whole out of your own pocket?
I should have known you were going to hit me with these tough questions, Mike.
That's a hard one. That's a really hard one.
A while ago, there was a guy who had invested a bunch of money with me, and a mutual friend called him up, and I heard about this conversation, and he said, hey, George wants me to invest with him. Like, sounds like you put a bunch of money with him. Like, how have things gone? And what he said, and it was repeated back to me by both of them, I've never lost money by investing with George. So I really like the way that sounds. If I pull money out of my pocket to give them like a return that I promised them, but things didn't go well, that's tougher for me to stomach than like, hey man, you gave me $20, wrong, here's your $20 back. And coming out of pocket for that is something that I would see myself doing if I were in that scenario. Luckily, it hasn't happened yet, but I have never lost money while investing with George is something that I want to have as a merit badge for as long as I possibly can, maybe my entire career if things work out.
So if, let's say somebody gives you $10 million and you've got $8 million to give back to them, right? So you lost $2 million and you yourself only have $500,000. What are you doing in that scenario?
In that scenario, they're out of luck.
Okay.
The well is dry.
Yeah.
So yeah, I do pretty well. But if at the end of the day, I'm looking, it's like, okay, I'm worth I'm worth $1, and I owe people $1.80, and it's either a tough phone conversation or become homeless. Yeah, I think I'm going to probably take the tough conversation. So yeah, you managed to drill down on the exact scenario where I would actually not return the money.
So the reason why I'm asking you is because this is how my conversation with someone I know was going. He's more in that scenario. And he was like, what do I do? Like, do I pay them back? And do I go into debt or at least like spend the next few years making them whole? And I started by saying, I don't totally know on this one. Like this, you're kind of there. There's the investment answer, and then maybe what you're struggling with is maybe the moral kind of answer.
Yeah, your reputation.
Yeah, and I don't know. It was easier for me to answer the investor side of it, right? Investments are not guaranteed. There's always risk with investment. So if they're expecting to get their whole principal back no matter what, then T-bills are probably more in line, and the return you can get from a treasury bill is probably where they're going. But if you're talking about trying to get 15 to 20% on your money each year, there's a greater risk to do that.
Yeah, and they know that going into it.
Yeah, well, they should. As if there's a lot of people out there that oversell and make these promises that this is a guaranteed win. Well, that's a different scenario. So,
totally.
But it was hard to hear, and it was hard to give good advice on.
No, but I mean, I think you did give them good advice, because at the end of the day, if you're investing essentially as a private equity deal, you got to understand the risks, and most of the time you have to be an accredited
Yeah.
investor to do this, and
Right.
that means that you make a few $100,000 a year, you're worth at least $1 million bucks, and you look at a contract and you know the risks. So, but if you know somebody personally and you want to keep doing business with them, you want to preserve your reputation, I think there is a time and a place to reach into your pocket and, make things better than what is actually the reality, especially in a scenario where like you messed up in some way. Like you zigged when you should have zagged and you should have known better. And, so here's a little bit more. But in large scale scenarios where there's just not enough hay in the barn, to feed all the animals, then you got it. That's one skill that you got to cultivate as an investor is being able to have those tough conversations.
Have you had a scenario where you guys were forecasting a certain return and the return was lower than what you were hoping?
Oh yeah, for sure. Yeah, and that's because when interest rates changed, because remember we were raising money for this thing like in 21 and 22. Yeah, interest rates were different and our valuation was higher, our cap rate was lower, and we raised some money during this time. So then the phone would ring and they would say, hey, so things have changed now. How's our outlook now? And we'd say, well, yeah, it has changed. Here's what it looks like now. And he's like, well, that's less. And I'm like, you're correct. It's less.
Yeah.
It's still good. It used to be really good. Now it's just good.
Yeah.
And I don't think it's going to go from good to bad. But I was upfront with him, and I'd say like, yeah, that's kind of where we're at now, and it's still not anywhere near zero, so still good.
Yeah, one thing that we started doing that was really helpful for us, and we started this, I think around 21. So this was newer. Is we would create a page on our investment summary that walked you through like what could go wrong and what the impact to potential return was.
Yeah.
So that, in the front and center, you're seeing what we're targeting. 17% net IRR. And then there's a page like, what happens if cap rates move? What happens if interest rates move? What happens if we have to discount rents? And how that brings that 17%, to 15, to 13, maybe even down to like 8. That's been huge for us, just to walk somebody through, what could go wrong.
What could go wrong,
Then include the probability of those things happening, which that's a whole nother conversation. And then when it does, it's a little bit easier because in the beginning you kind of prep them for, look, this is development. We are making forward-looking assumptions, and this is how we're planning for it.
Right.
But, how frequently you update investors, and I think showing them when there's challenge and getting them on board soon changes your whole experience, right? If you're for 2 years of building, you're painting this rosy picture, we're crushing it, and then all of a sudden, you actually get them up to speed on everything that went wrong over the last 15 months, you're going to have a bigger problem than, hey, we're 6 months in, we had an issue, we're going to be delayed by 2 months. This is how we're addressing it.
Oh, yeah.
That I found is a way better experience for the operator and the investor.
Absolutely. And that's the big issue that I see people keep running into, because I am part of this investment group within a tribe called GoBundance. It's basically a bunch of high net worth guys that, we network with each other. And invariably, the guys that are most pissed at their operators are the guys that haven't been adequately communicated with. Mm-hmm. And so they'll invest a bunch of money and seems like everything's going great. We hadn't heard anything, and then we get an email, and the email says that everything is going just horizontal, and we're all completely effed. You can't do that to a guy and have no explanation along the way and expect him not to be really pissed.
Right. So what do you think the balance is? Because we typically see this with newer or more inexperienced operators. And, they're so eager to perform because they'll look at this as their first shot. Investors gave me capital. I can't blow this. And also the entrepreneur and the reality that business, there's always challenges that you're facing. So we're kind of natural optimists.
Yeah.
Where is that balance between, okay, there's normal challenge and I'm the guy who's got to solve it. We're going to get through it. And once I fix it, everything will work out, versus you probably need to start communicating that something's not right.
Boy, yeah. That's the space you live in as a developer. It's a space of uncertainty. It's a space you live in as an entrepreneur. Whether you're a developer, you own a donut shop, if you're the guy whose name is on the door, who's holding the bag at the end of the day, then you're the guy who has to bear the brunt of this bad news. And if you've got people that are backing you, you gotta let them know about it. But you also don't want to unnecessarily alert them to something that's not going to be like a big deal or derail things, because then next thing you know, you're getting texted every day and you're having to deal with people that are worried. And so, how much stuff do you tell, your wife about how hard your day was? Do you want to add additional burden to yourself by way of her freaking out over something that she probably doesn't understand quite as well as you do? Or do you just want to talk about the kids' soccer game? I apply that same thing a lot of times to my investors. I'm not going to tell them everything until it needs to be told, and it's like an absolute verifiable, demonstrable fact that something is happening. But if I'm just worried about something, or I've got an inkling about something, or like cap rates have shifted a little bit, I don't think that really warrants an email. But what I will do is send them an email that says, hey, look, we've wrapped the building. Like, things are moving forward. Everything's fine. Also, it looks like cap rates have come up a little bit, but we're still looking good.
Right.
So I'll include it in sort of like a compliment sandwich. It's wrapping, like the bad and the good all together. But I'm not alarmed, but here's what's happening.
Right. What's your favorite thing about, what's the best thing about real estate? Is there one thing you absolutely love about it?
Money.
Just that it spits off money.
I like that.
What a clear answer, ready to go. You had that one locked and loaded. Safety was off.
Yeah, ready to deploy. I remember I got asked that in an interview like many years ago when I was interviewing to work at a real estate office. And I made up something off the top of my head. I was a younger guy, and I said, like, I would just really love to help people. And, that's true. I really, I do and everything. He just kind of looked at me like, And I was like, let me change that answer. And I said what I just said, and he's just like, you're the type of guy we need around here. And that kind of stuck with me. But yeah, it's not just about the money. I like to be able to create things. I was in a band back in the day, and we made music. I could hold up a CD and say, like, this is my product. And I could be proud of it because, I created it with some other guys. Same thing with real estate. If I build a house, an apartment building, I flip a house, I have something that I can show people that demonstrates my skill. It shows, how far I've come from, a young man who didn't know, which end was up through a guy who's now, able to create something that people really do truly like. So that part and the money are why I do real estate.
All right. What's the absolute worst thing about real estate?
I really hate losing, and I don't lose a lot, but like if you're going to step to the plate, you're going to strike out sometimes. And I've only lost money on like a couple of flips, but I really didn't like that one bit. And then there's the ones where I've toiled for years, and I look at my return. It's like, whoa, I made like $500,000. It took me 4 years, and it took this many hours, let's see, how much capital did I invest? Let's see. I think I was working for like $18 an hour and getting a return of like 7.5% on my money. Damn, like, yay, $500,000. Boo, wow. I just could have thrown it in the S&P and done just as well or better and saved myself countless hours. So yeah, but that's why you keep showing up every day, because, it's I like to describe my career as a very noisy graph, but it's an upward noisy graph. And the downtrends, like I said before, if you're a developer and you're in real estate, you live in that space. You need to be comfortable swimming in that tumultuous ocean where there's uncertainty, there's risk. If you just show up and punch in and punch out on every day of your W-2, there's a risk you get fired, but it's not the same as the type of risk that you experience in real estate. So it's not my least favorite thing about it, but it begets my least favorite thing about it.
That's fair. That's really fair.
But it also begets the thing that I like most about it. So, which is winning.
Money. I like winning and making money. I hate losing and losing money.
I know. Yeah. Put simply, that's correct.
All right. If anybody wants to find you, what's the best way to find you?
So yeah, honestly, I thought we were going to be talking about squatters and deed fraud today, but we just ended up having a great conversation about real estate.
This is
instead.
how these go, man.
That's how these
Somebody
go.
walks in, and I try to keep it so that it's like more of a. Where would this conversation go if you and I were just hanging out?
Yeah, no. Mikey's living room is the place to be. I love it here. This is nice. I'm on all the socials. I'm very easy to find. Just McCleary Realty and Development, George McCleary, real estate investor, squatterdefender.com, titlefrauddefender.com. Those are the my sort of side hustle right now from the whole squatter going viral thing. But send me a message. I'd love to hear from you, especially if you've got like a crazy squatter story or title fraud story, anything that's real estate fraud or scam related. I've heard all the stories now, but I'm always hungry for more, and I'm writing a book about it. And so hit me up. I would love to hear from you.
George, absolute pleasure.
Absolute pleasure, my man. This is great.